What's up, guys? Just wanted to give a quick shout out to today's sponsor, Aptos. We'll hear more about how Bitcoin, DeFi, and Aptos is heating up later today. But for now, let's get into the episode. Nothing said on ZeroX Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed.
Good morning. Welcome back to another ZeroX Research live stream. Today, we've got a bit of a special one. DoubleZero is kicking things off today, and we've got Austin Federa, co-founder of DoubleZero, here to join us. I've also got Ryan Connor, Cashflows Connor, here on the show to talk all things. I think we may also have Nick Carpenito, our DePIN guy at Blockworks Research, joining us here maybe momentarily. But how is everyone doing today? And maybe Austin, for you, probably a busy day, but how are we feeling this morning? Oh, you're muted.
Oh, been a very busy last few weeks leading up to this. So it's awesome to have the network launched. It's been a ton of work by everyone at DoubleZero Foundation, Melbeck Labs, all the different core contributors, all the different fiber network contributors. So it's been a busy few weeks here.
Is this your first token launch, or did you launch the Solana token as well?
No, I joined Solana Labs in December of 2020, so they already had a live token at that point.
Oh wow! So first token launch.
Yes.
Congrats! That's awesome,
Thank
man.
you.
Very cool.
Very cool. We just had Nick join us as well. Happy you could make it as our DePIN expert, I guess I would say, here at the research team. Maybe just to kick things off, I'll skip some of the ad reads for later in the show. Austin, since we have you, maybe just to get into the conversation around DoubleZero, the 2Z token, etc. If you want to give us a quick background, like inspiration for behind the protocol, like why it needs to be built, why you decided to build it, why leave Solana and go build DoubleZero, so on and so forth.
Yeah. So the core vision of DoubleZero is to enable blockchains and other types of high performance distributed systems to move beyond what the public internet is capable of. And, we sort of think about this as like, oh, everything just uses the public internet, right? It's like, well, most traditional trading systems do not run over the public internet. Apple, Google, Microsoft, OpenAI, all of these large technology companies, we think of them as public internet companies. Google, you think of as a public internet company. Meta, you think of as a public internet company. They all run massive private fiber networks that are much more performant than the public internet because the public internet can't really keep up with the needs of a company like that. Up until this point, blockchain has always had the public internet to run on and no alternative. And the reason for that is kind of simple. You won't, it's fine if all your Google data runs over Google's private fiber because you're already trusting Google with all of your stuff. You're not really concerned about the additional transport layer concern. But in crypto, where we have, validator networks run by thousands of independent contributors and independent participants, you don't want the network layer to be a point of centralization in that. And so the main sort of innovation, you could say, of the DoubleZero network over what you get in a traditional high-performance fiber network is it's run by multiple independent contributors. We have 12 independent contributors on the network today, and that basically means that you have certain amounts of censorship resistance and security guarantees that you would not have in transiting over traditional fiber. That's kind of the short version of it. And the real impetus for this was realizing that the software clients of blockchain systems were actually now fast enough to take use of this technology. This wasn't the case a few years ago, where the limiting factor really was the quality of the software. The software validator clients from from Firedancer to Agave by Anza to Aptos to Sui to a lot of these networks today, they actually are quite performant on a validator client perspective. The thing that's holding them back is how quickly they can perform consensus, how quickly they can move state around the world, all of these things that are now governed by the limiting factor of the public internet.
That's super interesting. I love the framing, and so there's like a lot of things there, right? There's like performance. I talks of censorship resistance. I'm super curious. You guys have seen a lot of adoption since the start here. I think we internally we track we kind of comp you guys against like Jito adoption over time from like the start of their announcement to now, and you guys are outpacing that historical adoption. Not to say that Jito's a very impressive team, and you guys are actually being adopted at a faster rate, which I think is really interesting. So like, what's been the customer feedback? Like, what do they love about the product? What are the gains that they're seeing? Like, I would love to get a view of like what validators think and what they're gaining so far.
Yeah, so I'll say when Jito launched, it was a very different environment. Not only were we in a bear market, but there wasn't a lot of revenue generation sources on Solana. And what Jito had to do is basically create an entirely new class of revenue, which they did very successfully. We're at a place now where the optimization around that revenue is very competitive. So we see people moving data centers for 10 basis points of additional MEV in a block. There's a lot of competition, especially among well-staked validators, to like eke every little ounce of performance and profitability they can out of that system. And so the DoubleZero network is part of that story. We will not succeed ultimately if we are not making validators more money, because we run a global fiber network with all of our contributors, and there's significant OpEx associated with that network. And so the promise to validators is that, there will be new types of systems built on this that not only allow, there's sort of two components. One is you enable blocks to be larger on Solana, so you have more fees because there's more transactions that can be included. That's kind of the most base layer one of, if I can move more stuff, I can get paid more because each block I have has more in it. And the second one really comes down to new types of revenue that are not really currently possible. And you see this in traditional exchanges when you see the cost to transact go down, or when you see the time it takes to transact go down. Either the exchange gets faster or the exchange gets cheaper. You see actually more revenue coming through these systems because it is a classic thing where like, yeah, you can, Oracle can sell $20 million contracts to 7 companies, or you can be Slack and you can sell a $5 subscription service to 100 million people. And it really is that kind of volume versus individual transaction kind of model there. And so that's kind of, that really is our North Star is, can we make validators more money? What we've seen in the early days of Mainnet-Beta and on the testnet as well, is that we're able to do things like reduce skip rates, which is basically a time when a validator is supposed to make a block, but for whatever reason, they can't. Maybe they don't have fresh enough data, all these other types of things. And so preventing validators from losing money is similar to making them more money. And so it's a more complex story for the benefit to a validator. But the benefit to a network like Solana is actually, outstrips the benefits to individual validators. And that is where you run into classically a cold start problem, when the aggregate benefits are felt by all users of the network, but an individual validator doesn't necessarily have the incentive to make that choice. And that's kind of where I think like there's a lot of social pressure on Solana to always keep improving and make the network faster and faster. There's a stake pool that delegates to validators on DoubleZero to sort of help compensate them for some of that as well. But it really is all about increasing bandwidth and reducing latency and letting these systems be able to reach their theoretical limits.
I love the skip rate data. That's super helpful and puts things into context. I know you guys released this dashboard on performance of your network. I would love if you could you dive into some of these numbers for us, or just like help us explain from like a high level? I'm seeing, average earned credits percentage. You guys are besting the public internet by like 50 bips.
Yeah.
Average missed credits, there's 3,300 for the public internet, only 443 on the DoubleZero network. Like, can you tell us what we're looking at here?
Yeah, so these are basically the financial metrics that are very like easy and objective to measure on chain, which is like there's a thing on Solana called timely vote credits, and if you accumulate too much of a negative balance, it can impact your ability not only to get in certain stake pools and receive delegation, but it can impact reward rates as well. And vote latency is really how late your validator is voting. Is it voting behind the cluster? And there's other penalizations for that as well. So these are a bunch of metrics that really came from like work with Anza and the Solana Foundation on what are some sort of like base level metrics we can kind of start with that show the difference between the public internet and the DoubleZero network. Now, over time, we have to incorporate things like What is the median fee per block for a block on DoubleZero? Is that higher or is that lower than the public internet? We see it's higher in a bit of testing, but it's very hard to kind of attribute some of these things. And then eventually we'll have to incorporate things like additional MEV from Jito and other types of sources that can make validators more profitable as well. So all this data, though, on this dashboard, this is like the really cool thing. This is all driven on chain. So all of this data is written into the DoubleZero ledger, and that's where this is actually pulling and generating this from. And so you can see in real time, what the link utilization is for a specific link in the chain, and you can also query the chain and you can get all of this data yourself to monitor and verify things.
Very cool. And if we go down, Danny, could you go to telemetry metrics? I think that those are I think that's very
Yeah.
this tells the story right here, I think, where this is, correct me if I'm wrong, but this is latency from location to location, right? Like all over the world.
Yeah, exactly. So if you mouse over one of these, you can sort of see what is DoubleZero, and then what is the sort of DoubleZero advantage compared to the public internet benchmark along that same route. And that's kind of where you can see and then the one below it, the chart below, if you scroll down a little bit more, is the performance over the public internet. And this is a percent-based increase. And so what you'll see if you kind of go to the far right of that chart is there's actually several routes that the public internet is pretty good on. And that's because these are more modern cable systems and more public internet traffic is also transmitting over those routes. But, then you see a bunch of the other ones where you see oh man, there's actually a whole bunch of areas where the public internet really is not performing particularly well. And the cool part about this, maybe not the cool part about this, the interesting thing about this, especially when you talk about the public internet, is this chart changes all the time. The public internet can be extremely performant for a limited duration of time, and then just you get routed onto a different cable system, or there's a cable cut, or something goes down for maintenance, and suddenly your performance gets terrible. And that's one of the really interesting pieces that we've had to look through with this is you will see sometimes when a very highly used cable goes down for maintenance, the public internet performance actually increases. Because the public ISPs that used to route you over the cheapest cable say, man, we want to use this cheap cable. It's not available. We have to use this one that's slightly faster. And so, ironically, when there's a major cable outage, sometimes the public internet gets more performant because the cheapest cost route is the thing that's impacted. So really, there's two components of this. There's the momentary additional performance of the DoubleZero network, and then there's the just rock solid stability from a latency perspective. If you look at sort of this New York to Sao Paulo link here, that latency time is the same 24/7, 365. As long as the cable is up, that latency time is the same. That is not true of the public internet pings by any means. Those have a high degree of variance to them, and there's something called jitter, which is sort of the measurement of how much that variance is over a given period of time. But if you look over a 24-hour period, you will see dramatic changes in latency depending on the time of day and depending on just how your data is being routed at that given moment.
So that variability, I mean, how much does it really puts into perspective how inefficient the public internet system is for actually your link to go down and then your performance to improve?
Yeah.
There's no what do they call it? There's no quality of service, it seems, if you are someone who's playing the latency game, or where latency really matters. So I don't know, how much does that impact validator planning or searcher planning or performance?
Yeah.
Is that are they screaming from the rooftops ISP or regular ISP agreements are really holding me back? Is this certainty around the variability that you guys provide? Is that how much of a value add is that to these players?
So I'll give you an example where there's a cable system across the Pacific that went down for maintenance. This was scheduled maintenance. This wasn't some sort of unexpected event. It was properly alerted and everyone was supposed to know about it. Suddenly, a whole bunch of validators in Tokyo started getting really high skip rates, and they started having really high vote latency, and they couldn't keep up with the cluster. And they're like, what happened? Nothing changed. There was this whole conversation of, is there a bug in the latest client? The answer is no. What had happened is their data was now being routed by their data center to get to the United States it was going through Europe. It was going around through Asia, through the Middle East, over Europe, and then over through the Atlantic. It was taking the long way around. And it was doing that because this cable system had gone offline. And this was a completely known event. Everyone who monitors these things knew this cable was going down for maintenance. But running a validator, you don't think about these things. You don't think about like, okay, when you think about, is my server running? Is there power in the data center? Does the data center have internet access? But once it leaves the NIC on your node, you're not really usually thinking about these types of things. And so that was kind of a little bit of a wake up moment for folks when they were saying, oh, we actually like need to be not only aware of geography, but aware of topology of these networks. And this was sort of not something people were generally optimizing for, especially in crypto. And so it really does matter. I would say that if you're a validator, all you need to be is fast enough. You just need to be fast enough to keep up with the chain, to vote on time, to build a block when it's your turn to build a block. If you're a trader, you live and die by latency. If you're a searcher, you live and die by the freshness of your data. And so there's a few different things that DoubleZero can do. The first is sort of the most obvious one, which is delivery. If you locate a server that you are trying to trade on the DoubleZero network, and you're trying to talk to a validator on the DoubleZero network, it will be the fastest path between those two things. Even if one of your trade servers in New York and the validator you're trying to talk to is in Singapore. We'll beat the public internet pretty much every time on that. The second one is using technologies that are not available on the public internet, like multicast. So multicast is this really cool technology where it's basically hardware acceleration for packet replication. So right now on a blockchain like Solana, what happens is you build a block and then you have to send it out via something called Turbine. And Turbine's basically this like giant block fan out where you say, I'm going to send it to 200 people. They're going to send it to 200 people. They're going to send it to 200 people. It's this nice fractal diagram. And in a very short period of time, you've got, all the block data synchronized all around the world. What's the problem here? Well, different people get data at different times. If you're in that first fan out group, you get data before the second group or the third group. And that is a huge advantage in trading. That's a huge advantage for a searcher. It's such an advantage that Jito and others actually run a sort of alternative to Turbine called Shredstream, which is designed to get people faster state updates than they get through Turbine. And that has been obviously a huge part of Jito's success from a searcher perspective. It's so successful that they have competitors who run like prop AMMs and types of things like that are doing the same exact thing. And so what we really see from this is that latency really matters and freshness of data really matters. And those are two things that the DoubleZero network, because of both the technology that it uses and the fiber links that it operates on, it's able to deliver both to validators and then to searchers and traders as well.
I feel like you've really gone into the value that the DoubleZero network provides. I think maybe on the other side of that, the 2Z token launched today as part of the core of the protocol there. I guess maybe the other side of that coin would be what value or what revenue streams or fee streams do we see 2Z or just DoubleZero as a whole sort of getting out of that arrangement, maybe in the future or where we're looking at in the immediate term?
Yeah, so the token is a really integral part to the network and how it functions. So the token, launched today, launched at the same valuation as the previous round, which was through the validator sale on CoinList, which is pretty exciting to see. And basically, the token is your payment source on the network. And so if you are a validator operating on the network, you pay a percentage of your block rewards in to use the DoubleZero network. And then what happens from there is those tokens are basically about 50% of them is burned, and the other 50% are distributed to network contributors, the people and entities running the fiber, according to something that we've built called proof of utility. And proof of utility is a different mechanism for distribution of rewards than you get in proof of stake. It actually much more closely resembles a proof of work system. So the thing about proof of stake is you're ultimately trying to secure a network with stake. It's right in the name of the thing. And so the stake really matters because these are stateful networks. The DoubleZero network is effectively a stateless network. We don't have, $2 billion of USDC on chain or something like that we have to secure. We're really only securing data in flight. And so what we use is something called Shapley values. And Shapley values are this economic and mathematical concept that says, how much worse would a system be if we pull one component of that system out? And so the nice thing about this is it balances based on how network links are used. If you show up for the DoubleZero network and you contribute a really valuable link, you will earn more rewards for that link than someone who contributes a less valuable link. And just like Bitcoin, it doesn't matter if I'm Michael Saylor or, if I just own like a tenth of a Bitcoin. If I'm contributing 10% of the hash power, I'm going to get 10% of the rewards. And that's not true in a proof of stake network. So this is a really nice feature of this that actually encourages competition between the network contributors. The other piece too is because 50% of those rewards are burned. It's a Sybil resistance mechanism for data transmission on the network. But there also currently is no inflation on the protocol.
I'm hoping to shift gears a little bit. I would like to know, you've had really awesome experience. A very important protocol, Solana. You got to see this space evolve from a really interesting position. 2024, I think Solana was like very much the leading chain. I can't say the same for 2025. It's clearly in the conversation is clearly a leading chain, but like the competition is getting more intense. You guys seem to be a pretty important part of why Solana will be able to either extend that lead, maintain it, or leapfrog some chains. I'm wondering, what are the next steps for Solana to like become like a leading ecosystem in your view?
Yeah, I mean, I think competition is fundamentally good for innovation and good for consumers. And, for a long time, Ethereum and Bitcoin enjoyed a regulatory moat that has been removed. I think for a long time, Solana enjoyed a performance moat that now a lot of people have caught up to as well. And that actually, I think, just increases the quality of products. The launch of something like Hyperliquid absolutely lit a fire under some developers on Solana to say, okay, we have to figure out like what is our response to this. I will say though that DoubleZero is not a Solana project. We are base layer neutral infrastructure. So Solana is the first network we're supporting. There's a bunch of L2s we've been talking with and running a bunch of tests with. There's a bunch of other L1s as well. There's this new project called Shelby, which is a hot storage network that Aptos is building. They've announced that that's going to run on DoubleZero as well. And so, look, I have a soft spot for the Solana ecosystem. I spent 4 years working there. I think there's great things in the future of that for that network, and I think it will remain competitive for years to come. But I'm very excited for the competition we're seeing, both in the more application-specific blockchains like the Perps networks, as well as just other fast blockchains and nice credible takes on how you can architect a blockchain differently. I really like what Mega ETH is doing with some node specialization experimentation. Aptos has some really cool ideas along those lines. And then multiple concurrent leaders, multiple concurrent proposers from Solana. I think that's an incredibly compelling vision for global DeFi markets.
Yeah, speaking of those other ecosystems, like what do you think, what's the time to actually serving those ecosystems? I saw like in the validator presale, I think there was some EVM chains or validators participating, some Aptos ones.
Yeah.
So there's some evidence that there's some support out there, but I don't know, what's the timeline on that?
So because this is like an OSI layer 1, 2, and 3 network, it's way below the blockchain or the smart contract or the VM space. So, support for other networks on the DoubleZero network is completely doable. And actually, we have a bunch of that work already done to support multiple blockchain ecosystems. So it's really up to those protocol developers, those validators, the people who make decisions within that network to decide, have we hit a bit of a plateau on our software performance? And do we need to think about, is it time to go faster than what the public internet allows? Do we want to do that as an organization? I don't think the Ethereum L1 is ever going to make the decision that they want to go faster than the public internet allows. But a lot of L2s, that's exactly what they're trying to do, as well as new L1s that are launching. So, I think it's a pretty interesting world that we're seeing. And DoubleZero is really ready to support anything that wants to run on it, whether blockchain systems or non-blockchain systems.
That's actually really interesting. There was a conversation this week. The internet in Afghanistan went down.
Yeah.
And there were some old Ethereum tweets that came up and some new ones about, censorship resistance. That's part of your story. I don't know. Would maybe they do want to use DoubleZero for censorship resistance purposes.
Yeah, I mean, there's definitely fallback options. I think the challenge is DoubleZero is not a residential internet service, right? We're not
Yeah.
coming into people's houses, in part because that's an incredibly regulated space, and in part because it's a unfathomably expensive thing to do to run fiber to everyone's house. And so there are areas where this can help. I mean, if you have a authoritarian government that turns off all of the internet, including the local internet and just all of the connectivity and all the cell towers, DoubleZero is not going to do much. You basically need Starlink at that point. And they're probably going to jam Starlink too, because that's actually quite doable. So it really depends on what you're trying to prevent against. Now, in a situation where like truly the entire internet of Afghanistan goes offline, like, okay, maybe that's a bit of an extreme one. But you look at something like Russia's invasion of Ukraine, and a lot of the internet did go down. But what did not go down were sort of critical communication channels and private fiber for the most part. And one of the nice things here is the kind of space DoubleZero is operating in is usually a space reserved for enterprises and governments. There's not a lot of like projects that have access to private dedicated fiber. It's mostly something that's used by big businesses and governments. And because of that, it tends to have its own carve-outs, and it tends to be treated much more as a mission critical system. You can sort of think about, back in the day, back in 2020, I think it was, when a bunch of different social media networks were getting, upstart networks were getting censored and removed from things like Amazon Web Services, and Facebook was blocking access to them. There was never a call to like Verizon, do deep packet inspections on every traffic that comes from this thing and block this web server, like at the base layer infrastructure level. It is treated a little bit more like electricity, where it's like, you can do crime that uses electricity, but the power company is not usually at fault for that. And that's kind of one of the things here is the lower level we get in the stack, the more socially expensive it is for the government to start interfering with that type of traffic. And so I would call that soft censorship resistance. It's not hard censorship resistance, but it's much easier for a government to turn off, to instruct someone to turn off access to a website or to talk to a residential internet service provider and say, hey, you got to block this thing, than it is for them to like go into a data center with a giant pair of pliers and start cutting fiber.
Outside of sort of immediate Solana L1 upgrades and maybe performance optimization on the Solana L1, and then upcoming FPGA upgrades that I think we can talk about in a second here. What do you see as like the next most logical step for DoubleZero to expand to another ecosystem? Is it other SVM based chains or network extensions, be that like Fogo or Bullet Chains network extension, or is it the ecosystems that are most in need in the short to medium term?
Yeah, there's kind of a few different ways to look at this. So the FPGA work, which we'll get into, that is a little bit more ecosystem specific. So there's a lot of work we can do for EVM and that, but that work has to be done. There's sort of two ways to think about like what do next steps look like. There's networks that desperately need this today, and that was sort of why Solana felt like the right place to start. There was a real willingness there to do it. The other way to think about it is new networks that haven't launched yet. They're getting into testnet now. It's very easy for them to just say, we're going to locate all of the validators on the DoubleZero network, or the L2 or something along those lines, because you're starting from scratch. You don't have a migration problem, all these other types of things. So I would say the hardest networks to work with are probably those that don't really have a problem, but are also mature enough that they have people who have a way they like to do things and don't want someone else telling them you should do it a different way. But there's some other, there's some interesting networks out there that have sort of come back and gained more attention recently, or doing more work with AI, and suddenly they've realized the data rate that they can synchronize data between the nodes is actually like a limiting factor to some of their growth, even in non-DeFi markets. And so, yeah, the next network, we don't have one to announce at the moment, but there's a lot of folks in the last few weeks who have expressed a lot of interest in both learning more and working with us on these things.
And I guess circling back, let's dive in on the edge spam filtration / FPGA side of the project. I'd love to learn more about that.
Definitely. So FPGAs are field programmable gate arrays. They're basically integrated circuits that can be reprogrammed in the field, which is compared to like the chip in your phone, which is like it's made one way and it can't be made a different way in the field. So that's kind of how these technologies work. They're really good at certain types of operations that you can now hardware accelerate. And so some of the early applications for that in a network like Solana or Ethereum is signature verification and transaction deduplication. And so you know, quite simply, it's just ED25519 math that says, hey, do the signatures match on this data? And if they don't, you can throw that data away. And the reason you can throw it away and not cry censorship is that data would never be eligible to make it into a block anyway, because it would fail on replay. Every other validator would reject that block if you put it in, because it has signatures that don't that fail on verification. Same thing with duplicate data. You wouldn't pack, you know, a ton of the same transactions into a block because the fee payer would only work once on that type of thing. And so those are kind of some of the early applications for this. The nice thing about FPGAs is they're very fast at these types of operations. So we can dedupe 100 gigabits per second of data. We can signature verify 100 gigabits per second of incoming data. And there's a lot of other things we can do with the FPGAs over the long term, like bring precision timing into networks. And so you actually can timestamp every packet as it moves through an FPGA. There's a lot of cool things you can do with that around order book time alignment, and there's a lot of other systems in TradFi that really rely on precision timing. But that precision timing always involves a lot of trust in the current systems. And so we think we can figure out a way to bring high precision timing into you know, a network environment without having that become a trust assumption product, be that something that actually can be verified.
Awesome. Well, Austin, I want to say, I think we're at the end of our time with you. I know you've got a busy day ahead of you. Really appreciate you coming on, talking about DoubleZero. I'll just open the floor for you maybe here as to lead you out. Any last words, things you want to say?
Yeah.
About the network, about the launch.
Look, if you are a validator and you're interested, we'd love to have you come operate on DoubleZero. If you are a protocol developer or a protocol founder, and you know you've got problems with latency or bandwidth, we'd love to talk.
Awesome. Thanks so much for coming on. Really appreciate it.
Thank you.
Congrats on the launch, man.
And
Take
good luck.
care. Yeah.
All right. Before we chat any further, guys, I want to do a quick shout out to our sponsors for today's stream. Actually, I think just one sponsor today. Shout out to Aptos. Aptos with nearly 400 million, or Bitcoin DeFi is heating up on Aptos. With nearly 400 million in BTC assets on chain, Aptos users can now earn yield on their Bitcoin via Echo aBTC and OKX's xBTC without the typical bridge risks and high fees. Thanks again to Aptos for sponsoring today's stream. All right. We can get back into it. I guess I wanted to just have a little chat, kind of post Austin's kind of deep dive for us there a little bit. How are we feeling? Nick, I know, maybe to lead this off, I know you wrote a little bit of a piece for the Blockworks Research subscribers the other day, a flash note on it. I guess, I don't know, whatever you guys want to dive into. I saw that there was a good bit of commentary around like the tokenomics of the protocol, like the breakdown there. But I don't know, how are we feeling? Do we have a particular lean here? I did see that 2Z launched at like a 6 billion or so FDV here at the open market, and kind of trending down off that. Quite a big jump over the, I think it was 700 or 750 mil valuation of the previous round, if I'm not correct, if I'm not mistaken.
Really?
Yeah, it was 750. I think we're at 5.5 bill now. But I think this is one of those things that'll settle off. It's a little bit of a mispricing, but I do expect it to be trading above the pre-sale FTV. That said, I think probably the most interesting thing we're seeing now is, like, woke up today, DoubleZero's got 23.5% of the mainnet stake penetration on Solana. When they hit 25%, or I guess maybe taking a step back, currently validators are paying 5% of their base fees, voting fees, and priority fees. Once they hit that 25% threshold and then sustain it, it'll be 5% of Jito tips as well. And so that's really like one of their first major milestones. It was something that I was anticipating would happen, at least a couple weeks after launch, but it looks like the validator adoption is increasingly speeding up, and I don't think that it's going to be slowing down until we're at least past that threshold. Beyond that, the next major threshold in terms of fee capture for DoubleZero is the 5% of inflation rewards, which is really the last milestone in terms of capturing on the network, but that's activated at 60%, so a super majority of mainnet stake.
Yeah, I guess maybe slightly related to that, they did just have an announcement today about their stake pool, adding another 10 million SOL to their stake pool, so they have 13 million total SOL, and I think a good portion of that is used in their delegation program, similar to what Solana does for their delegation program. So they can, subsidize, some amount of validators to basically join the network, which seems meaningful. So I guess to your point about maybe hitting that 25% mark, it may not be that difficult if they have this kind of huge cache of SOL to incentivize additional stake to come on board.
Yeah, absolutely. It looks like they've deployed about 3.5 of that 10 so far. I'm sure it's a busy day, so I expect that to be deployed by sometime next week. But that said, yeah, it's going to be the second largest pool after Jito's pool, and I think only slightly short of that by about 2 million SOL. And yeah, I'm definitely really excited to. I mean, I guess you've seen the Solana Foundation delegation program sort of tapering off in the last 12 to 18 months, maybe. And I think it's awesome that DoubleZero is sort of taking that spot and being the sort of, I'm a small validator. I'm running a community validator. I need help. Like, this is the place to join.
I guess maybe the other thing we didn't talk about, and is maybe a broader point to discuss with both you, Ryan and Nick, around tokens, maybe DePIN tokens generally, but DoubleZero and I think DePIN tokens generally, there was a no action letter sent by the SEC in regards to the 2Z token. Basically, describing it as not a security, based on the the information that they've provided to the agencies, which feels pretty meaningful. That it seems like the DePIN sector kind of got a nod here broadly, that these types of tokens are, safe, not securities, not going to be attacked by the regulatory agencies, at least as they are today. I don't know. How do you guys feel? Is that a new tailwind, or did we feel this coming, kind of based on how the administration's been stanced since last year?
I think it was sort of on the horizon. There's been quite a bit of work from multiple parties leading up to this, and there was a few months ago sort of a DePIN coalition that was formed between Helium, Akash, Render, and maybe 2 other projects where they went down to DC, and they've been actively pushing back on any securities laws that would be applied specifically to DePIN tokens. And so I think DoubleZero's no action letter and then the following comments from Commissioner Pierce were certainly something that we weren't expecting so soon, but definitely something that was in the cards. And I think most DePIN projects will benefit from. The important caveat here is that in the no action letter and in the comments from Commissioner Pierce, there is some interesting wording, and I don't have it in front of me, around basically that, it goes back to the verifiability of your revenues and the verifiability of the work happening on chain. So your more mature DePIN projects, the majority of them today are operating like this, where you can see everything on chain, and if something's not on chain, there's a publicly accessible source that can be verified. But some more nascent projects, and I think many other sort of DePIN adjacent projects, aren't prioritizing this level of verifiability. And so I think this is more of a wake-up call than a green flag for those teams.
Yeah, I do see there is this note here from Michael Shaman chief counsel, but stating there's a specific note here around programmatic transfers being a key piece of this, which I think goes to your point around having this, structured in a way that things are happening on chain automatically. You're not making part of the protocol is not being defined by like handshake agreements, off chain, that are big movers and shakers there.
Yeah, I feel like we're oscillating back and forth between like, for a long time, I think that maximal decentralization was not an advantage, and it was actually advantageous for you to act more like a company than a decentralized protocol. And now it seems like we're moving toward an SEC that actually favors some level of decentralization, and that's actually starting to become an advantage. So yeah, it's like a moving target for teams, but this is really cool. Like, I think it's a huge announcement from the SEC, but we're so numb to it, right? Like we've had so many positive announcements recently that I feel like this one was overlooked, but I mean, really substantial and important.
Yeah, I think your point about like the level of decentralization is interesting because it does feel like now there's more of maybe a sweet spot where, probably ideally you still want this core protocol labs team, founding team that is really making all the decisions so you can, grow, optimize for growth, expand, et cetera, whatever that most important factor is in the early stages of a project, not bogged down by like DAO governance, for example, to make key decisions. But at the same time, you might be hindered if the way that certain decisions or actions are being made, if the SEC is going to take a particular stance there, you might have to ride that line a little bit more now than you've had to.
Do we think this opens the gates for at least DePIN token or DePIN project foundations to be either onshored or launched in the US by default?
Yeah, I mean, I feel like teams have to be thinking about that, right? I think, US is the capital of capital, and being elsewhere was kind of a disadvantage. Well, the only advantage was that you weren't subject to a hostile regulatory regime. And now, why not? Why not be where the action is? Like everyone in crypto is in New York City. Like, why not take advantage of that?
Yeah, I guess the only trade-off would be if there's some level of reporting requirement or amount of meetings or disclosures that are required to get to this point where you get sort of the okay green light from the agencies, or if they have made something of a blanket statement here, but I don't know if it's quite as far reaching as hey, if I launch a new DePIN network today, I'm like kind of given a green flag by default, or if I have to sort of work my way there. Those sort of steps or hurdles to kind of be accepted in that manner might be a reason not to, but maybe they'll release some more guidance here. Like the ETFs, I think we've seen good moves in that area where they're looking to get to like a pretty standard, like, fill out XYZ thing, have these types of this type of setup with your ETF filing and you're good to go, sort of thing. So I think if you get to that point where it's very clear, then it would make a lot of sense.
What do you guys think of 2Z or the DoubleZero project as like a moment for DePIN? Like, this changes kind of like the market perception of DePIN. I feel like, talking to DePIN founders, even the successful ones, like there's like negative sentiment toward that sector. There has been for a long time. I haven't shared it, but I do understand it just from like a token price performance perspective. There's been like a lot of disappointments. Like, I don't know. To me, the DoubleZero's story is super compelling. There's like obvious PMF. Adoption has been pretty rapid. Like, could this turn around the whole sector?
I think to an extent, like this opens the doors to change sentiment a little bit. I think what really opens the doors to changing sentiment in the DePIN sector is going to be after 2Z has been live for a month or two, and we're starting to see burns happening on chain, moving back to the DePIN revenue meta that I feel like is sort of floated out of reach in recent months, maybe even in 2025.
Yeah, I think I'd agree with that sentiment. I think I don't know, a lot of the crypto markets today have been, at least for on-chain protocols, has really been centered around seeing the revenues actually turn into value accrual to the token, like explicitly and not just generically. So to see, you know, the fee revenue split that they're getting from validators, for example, turn into a buyback or a burn of tokens, or, you know, accrue to a protocol related, you know, treasury, something along those lines, would maybe be a solid confirmation of that, I think.
Yeah, I
And I
just think
think
it's so. Oh, go for it, Nick. Sorry.
just adding on top of what Danny said, I think the no action letter from the SEC really, I mean, like by extension, enshrines the buyback and burn process, at least for DePIN networks, maybe for all projects in crypto, but that's something interesting. And I think that's a huge catalyst for teams who aren't necessarily doing anything with their revenue quite yet.
Yeah, man. TradFi, it's like kind of cliche. I brought it up a bunch, but I'm going to bring it up again. DePIN things are the only things that I can explain to my TradFi friends, and then they like get it. DePIN things, or like maybe an exchange. Like I think now that Hyperliquid's printing so much, like they're starting to grasp that. But yeah, just like physical infrastructure, real world, like it looks like telecom, or it looks like a data center thing. It's just DePIN. I feel like it is. There's the potential for this moment where TradFi just it just gets hot in the TradFi crowd, and they really like the stories, and they really like the valuations. And you know, I think what are the two examples? One was Bill Ackman purchasing the HNT token. That was a big one, and I think he also, oh man, he brought up another network. But like for someone like Bill Ackman to kind of, you know, tweet about his excitement of this net of DePINs, it like he's like the classic value investor. He's like a Warren Buffett style type of guy. Like if these stories can resonate with him, you know, if DoubleZero starts printing, making meaningful revenue, burning the token on chain, yeah, I do think that there's probability that like this narrative really could take off, and it might not be with the crypto crowd. It could be with the TradFi crowd. Who knows?
Yeah, I think a big question is going to come down to, at least for DoubleZero, like their growth going forward. To see them saturate Solana obviously would be big. Though if you have questions about maybe Solana's future trajectory, then to see them like make their way into other networks, there's probably not a ton that it would be meaningfully impactful today, but I don't know, you could pick out some of the, at least some of the larger networks that rely on, you know, high speed, high throughput, you know, your Swedes, your Aptoses, and then maybe like single sequencer, fast chain type of deployments. A Hyperliquid obviously would be incredibly interesting as well. Seeing some traction in different areas would be interesting.
Well, yeah, that implication of the, you know, the SEC saying, or you know, implying that perhaps, you know, these L2s, they need to decentralize in order to not be considered exchanges. Like, okay, like a lot of the EVM L2s are at a performance disadvantage, and now you have to decentralize. Now you're at a greater performance disadvantage. Like that's an incentive to use DoubleZero. So you could, you know, there's a path where that happens. That's pretty interesting.
And I think it makes sense if you think about something like, you know, Mega ETH we had on Bread Guy a couple weeks ago, but you know, where they're really just trying to ramp as much throughput as possible, then the like potential latency gains feel meaningful if you're trying to cram, you know, 20K TPS through one, you know, validator.
Well, and I think there are architectural design decisions that you can make now because DoubleZero is live, right? Like if you can design an L1 or an L2 from day one to be composable with DoubleZero, there are, you know, ways that you could optimize your client, ways that you could optimize your chain that weren't previously available to you, which I think is super interesting. But I also tend to think that the TAM of DoubleZero is much larger than supporting blockchain ecosystems. I mean, think about applications in sort of like content delivery or things like distributed training. Like it almost enables such a large swath of new applications if they were to move to, I guess, support new applications in, maybe a year or two. I think that, there's a million ways that you could aggregate private fiber and apply it to a specific use case that may even generate more value than DoubleZero on all L1 and L2 chains combined.
Yeah, we'll see. I know that that's like I think of the DoubleZero white paper. They kind of highlight CDNs as a potential customer. I don't know. I guess if they're relying on the public internet, they have those kind of like they lack the latency guarantees, and if you need them, you can either build your own network, you can rely on some private fiber that you're renting out, or you could use this network. Yeah, we'll see what the performance stats say, right? Like if they can show the performance, you're gonna have some guy at some CDN where performance is like the only thing that matters. Be like, hey, this is actually a viable alternative.
Yeah, and I guess to the point around, if you have the option of private fiber network, does the kind of crypto economic design here, like subsidizing some of the validators, and maybe that subsidizes some of the cost, like would that make it meaningfully attractive to like a CDN, for example, to go this route? Like, are they going to be meaningfully cost competitive with those traditional routes? Would be my question there, which we'll have to see. I don't think it's not clear right at this moment.
I was listening to another stream that Austin was on sometime yesterday, and they asked him what the closest competitor to DoubleZero is today, and he mentioned Cloudflare and Akamai, which are your two biggest public CDN providers, which I think is really interesting. I mean, obviously, architecturally, it's very different from something like a Cloudflare and Akamai, but at the same time, it's completely composable with both of those networks. And we just got word yesterday that Pipe Network, which is basically trying to build a one-to-one replacement of Cloudflare in the DePIN sector, is going live with their token on the 8th, so Wednesday of next week. So super excited to see where things go. I know that DoubleZero and Pipe Network have partnered to some extent, and so this could be an awesome catalyst for them to launch their network on DoubleZero as well.
Yeah, what's the partnership there?
It was one of those general, like, what you see on Twitter, like we've partnered with blank with no announcements. So I don't have any details there. And I think a lot of people would say the two networks are competitive, but I really view the two networks as completely composable.
And what do you mean by completely composable? Can you be a little bit more specific?
I think for places where the DoubleZero network is unable, like there's not existing fiber, but maybe using the public internet, there's an optimized route through Pipe Network, they could utilize that in their infrastructure. And then on the other side of things, if there's places where it's going to be faster to deliver a packet via Pipe Network, the DoubleZero network could offload a packet to the Pipe Network to get it to the next data center and then to a cable. It's really just a route optimization problem, and it's a very complicated problem, but I think it's something that we are likely going to see different approaches to, because I mean, obviously we can't have a single private fiber cable between every data center in the world. Like there are going to be places where we need to use the public internet, and in those places, the routes need to be as optimized as possible.
Makes sense. Before we close things out here, I'm going to do one last shout out to our sponsor for today's stream, Aptos. With nearly 400 million BTC assets on chain, supported by a secure, fast, and affordable MVM environment, Aptos has become the BTCFi growth chain. Aptos users can now earn yield on their Bitcoin via Echo's aBTC and OKX's xBTC without the typical bridge risks and high fees. With support from Echo, OKX, and Stacks' SBTC, Aptos is the place to go for best-in-class yield on Bitcoin. Appreciate the support, Aptos. Let's close it out, gentlemen. I guess any last thoughts then on DoubleZero, 2Z token? The tokenomics were a big sort of question mark that I saw on the timeline, and even internally we were talking about quite a bit. A bit of a different approach, I would say, than most launches lately. So Not like no community allocation or something along those. I guess they have like an ecosystem kind of portion of tokens via the foundation. But 1% to the validators via that sale, a large amount to Jump and Malbec Labs, those two labs teams that contributed to the project, and then to other kind of like early insider contributor teams as well. Quite a bit different than like your maybe more crypto ethos, CT aligned ethos project that, gives 10% of the tokens as an airdrop or something like that. I don't know. Any thoughts there maybe to close it out on tokenomics, general thoughts on 2Z?
Most important part of tokenomics is making money. Structure doesn't matter that much when you're bringing in cash and providing a lot of value. I think we see that in the market today. And I think you're probably going to see that with 2Z.
Yeah, I think echoing what Ryan said, time to market was extremely impressive. And at the end of the day, they don't need retail participants for this network to succeed, right? Like there's no reason to airdrop tokens to a community of people who, retweeted all the tweets on your account or yapped about you. And so, yeah, I think it's awesome to see, and I'm super excited to see where DoubleZero goes from here.
Yeah, no Discord allocations. It does remind me, I think Mike Dudas maybe had a tweet a couple of days ago talking about how more token launches are looking more like kind of like company launches. And I think Mippo followed it up and said, if we just started calling them companies and not protocols, maybe it would make more sense. We still need to solve the one little issue that we have this dual token and equity structure. And maybe some of that, a lot of that gray area goes away. But I think more and more we're seeing steps in the right direction generally when it comes to tokenomics, when it comes to revenue flow, value accrual. A lot of those things are improving. So in this case, yeah, I agree with you, Nick. I don't know that airdropping, the hype boys on Twitter really matters for DoubleZero. They're not really selling the product to them.
And my final thought here, on the other hand, if you have access to private fiber, if you're running a data center that has access to private fiber, this is a generational opportunity for you. I mean, what other avenues have you had to monetize your private fiber with more than one single application? So I'm super excited to see exactly how that plays out as well.
Cool. We'll leave it there. Well, thanks for hopping on, guys, and glad we got to chat with Austin about the launch. And we'll see you all out there, the chat, next week. No stream tomorrow, but we will see you next week. Bach is out, unfortunately, so hopefully we can have him back and healthy for a fresh stream on Monday. All righty. Thanks for coming on, guys. We'll see you next time.
See you guys.